Look, we all know Meta, right? I mean, Facebook, Instagram, WhatsApp. They're practically woven into the fabric of our daily lives. But what's fascinating is that the story behind its stock right now is, well, it's a huge contradiction. And that's what we're going to unpack today. So let's just jump right in. On one hand, you've got a business that is absolutely crushing it. I mean, just booming. But on the other hand, the stock chart, it's flashing some pretty serious warning signs. So what gives? What is really going on here? That's the puzzle we're going to solve together. Okay, first things first, let's look at the bullish case. Why would you look at Meta and think, yup, this is an absolute no-brainer buy? Because honestly, the evidence from the business side of things is, well, it's incredibly compelling.
All right, so to start, you've got the experts weighing in. The investment research firm Zacks, for example, gives Meta a solid buy rating. And this isn't just a whim. It's because the financial analysts, the people who crunch these numbers for a living, are consistently raising their expectations for what Meta's going to earn in the future.
And it's really not hard to see why they're so pumped. Just look at this. In 2024, the company's earnings per share, they didn't just grow, they exploded, up a staggering 42.5% from the year before. I mean, wow. That's the kind of insane growth you'd expect from some hot new startup, not a global giant like Meta.
And hey, to really put that number into perspective, check this out. Meta isn't just having a good year. It's absolutely leaving everyone else in the dust. That 42.5% growth, it just crushes the average for the S&P 500 and even for its own sector. It's just playing a different game right now. All right, so far so good, right? I mean, everything looks incredible. But this is where our story takes a sharp turn. Because despite all those amazing fundamentals we just walked through, what the stock price is actually doing tells a completely different and, frankly, a much more worrying story. Get this. In just the last month, the stock has dropped by almost 12%. That's a pretty big dip, and it just seems to fly completely in the face of all that good news, right? This is our first big, flashing red flag. And no, this isn't just some random bad week. If we zoom out a bit, you can see a pretty clear pattern forming here, a pattern of negative momentum. The stock's down over 18% in the last 12 weeks. So yeah, the trend is definitely pointing the wrong way. Okay, now we get to what might just be the smoking gun in this whole mystery. If you really want to get a feel for a company's future, you gotta watch what the insiders are doing. The executives, the people running the show. What are they doing with their own money?
And wow, the picture here could not be more clear. In 2025 so far, not a single executive, not a single director has bought one share of Meta stock on the open market. Nothing. Zilch. Zero. But selling? They've been selling. A lot. The CEO alone has cashed out over $40 million worth of his own shares.
So here's the thing you have to understand. People sell stock for all kinds of reasons, right? They're diversifying, buying a new house, maybe paying taxes, but they usually only buy for one reason. They think the stock price is going up. The fact that literally no one on the inside is buying, even after the price is dropped, that is a huge, huge cautionary signal. And this isn't just one guy making a move. The selling is happening all across the top brass, the C-suite. We're talking the CEO, the CFO, the chief technology officer. We're seeing this consistent pattern of Meta's top leadership cashing out millions and millions of dollars in stock. So what do you do with this? You've got this amazing business growth on one side, but on the other, you have this really concerning stock momentum and insider selling. How in the world do you navigate a contradiction like that? Well, let's take a look at the professional strategy that this analysis suggests. And the verdict isn't a simple sell. It's more of a hold or wait. What that means is if you already own it, you might just hang on. But if you're thinking about buying, the smart play, according to this, is to just stay on the sidelines for now. It's a game of patience, waiting for those red flags to go away. And this breaks that waiting game down into a super clear, actionable plan. You're not just waiting around hoping for the best. You're looking for specific green lights. First, you want to see that short-term price trend actually turn around and go positive. Then, and this is a big one, you're watching for any sign of insider buying. That would be a massive vote of confidence. And if those things happen, you might target a potential entry point somewhere in that $575 to $600 range. And here you go. This is basically your cheat sheet for watching this story play out. On the left, you've got the risks you need to monitor. Keep a close eye on that continued insider selling and the huge costs of their AI investments. On the right, you've got the good stuff, the potential bullish catalysts. And notice what's right there at the top of the list.
Any, and I mean any, insider buying would be a game changer.
And so this is where we land. Meta is just a classic, fascinating dilemma for any investor. The spreadsheets, the hard data, they're all screaming buy. I mean, the performance is phenomenal. But the actions of the people who know this company from the inside out, they're quietly whispering, not yet. And it leaves us with this really critical question. In this battle between the data and human action, who do you listen to?